everyone, welcome back. Today we're going to discuss Sundial growers again. So this particular stock is a bit nerve-wracking because it has been on a downtrend and move up, and some of us thinking that it might be doing what you call a cup pattern, but actually it failed from the cup pattern. Right now it's probably making a cup and handle pattern. So that's what we're going to look in this video, whether it's going to make that cup and handle pattern and what are the risks lines or rather the resistance lines we have. How should we play this trade? This is what we're gonna look in this particular video. So if you're interested in trading this particular stock or at least analyzing this stock, stay tuned and watch until the end. So this is Shah&Co. Please like, share, and don't forget to subscribe. Click the subscribe button and we're gonna start very soon. So now let's begin the analysis. So if you look at this particular chart, I'm going to analyze this chart from linear chart as well as the logarithmic chart so that we see things more clearly. So right now I'm in a linear chart, so you can see that the price went down and then it made a curve to went up. So in fact it managed to what you call make a cup pattern. So you can see that it touched this particular resistance. So you see that it went down, make a curve and went up. So that's a cup pattern, but then it failed the cup pattern, because if it is successful then it must have breakout and then the price anticipation of what are we expecting for price move. So if the cup is successful, right, it should be breaking out and then the price move will be quite huge, because according to the theory, so let me adjust the chart. So according to the theory, if the low is somewhere here and we see that the price has increased from low to that cup resistance about 370. So if the price moved up by 370 and it managed to break out at this region, so if it managed to successfully break out on this region, we also expecting another price move above to the tune of $3.70. So we expecting a price move. So but that did not happen. And what in fact happened was actually there's a failure, so the cup did not form and the price tumbled down. Okay, and it is again trying to make another curve down there. That possibly could be a handle. So that's what we want to look at here. Is it really a handle or not? And if I'm right now in the linear chart, so to analyze this is better to use what you call log chart. So now I'm moving it to log chart. See, there is a price difference, there is a visual difference. This is a line chart or linear chart. This is the log chart. So the difference between line chart and log chart is in the line or rather linear chart is the difference is in terms of units. Okay, so the difference between the what you call visual difference in the plotting is in the terms of units. So price increase of $10 to $20 will have the same distance or size compared to a price increase, let's say from $20 to $30. Okay, 10 to 20, 20 to 30 will be same in terms of the distance will be the same. Whereas if you use a logarithmic chart, it is using percentage. So you will only get a same distance if the percentage of increase is the same. So that means $10 to $20 increase. If you want to have that same distance in the chart, the price increase has to be from $20 to $40. Okay, so there only you see 100% to 100% price increase. Okay, so that is a bit more. That is about the linear chart and the logarithmic chart. So when do we use logarithmic chart? Is when you see huge price moves. So as in what we are seeing here, the price was somewhere around. Let me see. The high was around somewhere around $13 something, right? But the low here is around 25 cents, right? So there's a huge difference between these two, right? So to have a better analysis, so it's better for us, especially when we are seeing a long-term pattern. So we are looking across many months here. So therefore, it's better for us to switch it to log pattern. Okay. And now what we are seeing here is cup is successful. I mean the pattern, we can see the pattern, but the breakout wasn't successful. from the cup pattern wasn't successful. What we see in fact is it's a kind of handle being formed here. So is it really a handle? Yeah, actually it's kind of handle. You know why? Let us try to draw lines here. Okay, so okay, I think I have to change it to weekly chart to see it clearly. Okay, let me try to do it again. So in the weekly chart you can see the breakout very clearly, unlike the day chart. See, this is a resistance line there, right? Do you see that resistance line? Okay, somewhat resistance line, and see there is a huge price move above, right? This price move, and it comes with a huge volume. I mean, these are some of the characteristic for a candle. For a handle, yeah, for handle. So we somewhat seeing a handle, and in the same manner we are also seeing another kind of resistance line here, right? So if I were to zoom in and try to plot it more precisely, I would get that. So I'm trying to do that now. Okay, so there is a mini resistance line there. So we are anticipating at this moment, we are anticipating for a breakout around this area. Okay, and again with a huge volume. Okay, the volume must be huge in that area as the price move up. If the volume is not huge, then there's a lot of doubt, okay, that the handle is successfully forming. Okay, the handle is not successful. We are just talking about formation of this handle. So we need a high volume to appear when the price breakout happen at this particular point. Okay, so that is what we are looking. So it might be happening today or tomorrow, hopefully. Now, what are the resistance we have? Okay, if say example the price managed to, so what is the reward? Let us look at the reward that we're expecting, because this is going to be a handle, right? So we can we can extend this, right? Okay, so there it goes. So the with the extension now, if the price managed to move up to that much, like $3.20 something, then we are expecting the same quantum move upward after the breakout. Say for example, if it breakouts here, breakout somewhere around this area, if it breakouts, we are expecting that $3.20 move above. Okay, so if you are buying somewhere at the low here, then you have a lot to benefit, but of course you have a lot risk to take as well. So if you want to play safe, if you really want to play safe, 100% play safe, then you buy at this area when the breakout is seen, and the volume also, you look at the volume. If the volume is huge and the price breakout, for you look at least 2-3 days. If the breakout seems to be happening, I mean the price continuously increasing, then you can enter, and then you can actually gain that. You just take the gain part, no? So now if you trade now, you take the risk, and then you get a higher reward. But if you want to really play safe, I mean, you may just want to play around this area when the later on, say for example, if the price breakout, you just get the gain part without taking much risk. Because if it's really a breakout with a high volume, it's quite sure it's gonna move up. The risk is very, very little. See? But I believe for those of you watching this video, you are kind of risk taker. You want to buy low probably, anticipate and gain more reward, I guess. Okay, so now let's come back. So that is the reward we have. So if the price move 320 up, it is expected to move also 320 further up after the breakout. Okay, that is the reward. So now what are the risks we have here? So let me clear the chart. Okay, so we try to draw a resistance line. So we'll try to connect this low. You see, it's already touching the resistance line. In fact, it went down. Okay, and then the buyer suddenly quickly pulled, and then that's why you see a wick there. Okay, so it's already touching it. So it's like 50-50 right now. Okay, it's really a 50-50 whether the handle will be successful or not, because we are really anticipating for a breakout at this point. Price must go up. Okay, must go up, otherwise it will be a failure. Okay, so that's the resistance point right now. And if you want to play so if you are not that high risk taker, I mean if you are super not risk taker, then you better play at the actual breakout we are anticipating around this area. Okay, that's like your risk is almost zero. You don't want to take any risk. But if you are kind of, yes, I want to take a little bit of risk, then you might want to trade around this area. Okay, so let me erase this thing out. Okay, so you might want to trade around this area when there is more clear evidence the price breakout from this particular, okay, let me draw again, this particular resistance area. Okay, so you see you have this particular line, right? So if the price managed to break out from that line, and you can see a bit of consistent breakout, I mean price you have to watch at least 2 to 3 days, see whether the price keep going up and the volume is also high, then you might want to enter. So this is risk is still there, but is slightly lesser. Okay, slightly lesser risk. Okay, so that is a bit play safe, I would say. Okay, but also you have to bear in mind this particular resistance line that you have here. You have two line crossing, right? So you also have to bear mind of this particular resistance line, whether it's keep going up or not. Okay, so if the price is moving below here in this region, it's going to be a bit tough, I would say. Okay, but we will see how the pattern forms after this. Okay, but let us also look at Fibonacci. Let's try to do Fibonacci analysis. See, the price moved up and it retraces. So price went up and then it retraced. It touched more than 50%. That's actually a bad news. We prefer for the retracement to be not touching that 50%. At least on the 50% it bounced up, but it didn't happen. It actually went down a bit. Okay, so that is slight negative news, but it will be better, especially for handle, right? If you the handle will be stronger. It's for the cup and handle pattern, right? The handle will be stronger if it only retraces about 1/3 of the height here. So that means we are only looking around 33%, 35%, somewhere around 33%. It already bounced up after the retracement. That's a good thing. Okay, but this one it retraces up to 50%. The more it retraces, the weaker it goes to. Okay, so we want a retracement to be not that severe, no. So 1/3 of the height is ideal, I would say, but this one is slightly more than that. But we see some pattern. Especially there's breakout every time. So we saw a breakout in this place, right? So we draw a resistance line, there's a breakout, and we're hoping for another breakout on this area. So let's see how it forms. So things are still 50-50, we can't say for sure. But this if you are buying at this time, you must be very, very high risk taker for I mean in your trading. But I would recommend you not to be that risk taker. I mean, we want to have, usually we do trade like this. We want to have one how should I say? We want to have a ratio of 1 to 2. For a scale of 1 risk, we want to have at least 2, 2 times the reward. Okay, so right now the risk is, let's say, what's absolute risk? If the price crosses downward of this particular risk line, resistance line, the price will go all the way to this low now. So you will get a severe hit now. So if you really go down out of this resistance lines, it might go all the way down there. So the risk reward, what is your reward? Your reward is only this much, the price going from this area to up, right? And then your risk is this much. It's not really 1 to 2 ratio, so your risk is more. Okay, this is all your risk. Okay, from this line, if you take this line, from there to down here is so much of risk, and that's only your reward. Do you want to trade that kind of reward? Of course, things may, after this line, it may go up or it may go down, right? So we are not sure on that. Of course, if it goes up, and then you have more reward, no? But we're just looking at the immediate reward. What is the hanging fruits? What are low hanging fruits? Low hanging fruit is very, very less here. So it may go up that much, but it go up a bit more, much more, right? So that's why you have to be depend on your risk profile. What is your risk profile to trade these kind of what you call stocks, Sundial growers? Yeah? So I've already explained in this video how should you trade if you are a very risk taker, and if you just very risk taker, you can go in now. If you have little high risk, and then you may wait for retracement from this particular line. But if you have absolutely no risk, then you just wait until the price go up here. Wait for the breakout, consistent breakout with a high volume, then you can go in. Okay, so that's what I think onto the trading plan here. Of course, when you say trading plan, then you need to also look at stop loss. I see your stop loss is very small, no? So your stop loss is somewhere here. Yeah, let me clear up. Okay, so let's say you're trading this particular pattern here. Okay. So let's say you're anticipating a breakout in this area. Okay, if it happens in a big volume, it's a good news for you. But if it's a bad news, then your stop loss has to be somewhat lower here. So at least your risk is not that high. See, when you have a stop loss, you have that much to lose. Okay, you have that much to lose around here. This one is how much you're gonna lose. Of course, you have more to gain. Okay, so if you look at this angle, of course you have a lot more what you call reward ratio, risk reward ratio. It's all about personality or how you want to trade this stock. So I wouldn't give a general advice. So there's risk in this trade. There's also reward in this race. So you judge yourself. What do you think you are? Okay, for that, I think I'll end this video at this point. I think I've talked enough. So give your comments. What do you think? In fact, I'm making this video out of one of the requests from one of the comments that I received with the same stock I analyzed in one of the video. You may watch that video as well. I'll put it at the end screen, so you can watch at the end screen what was my previous review on this particular stock. I was estimating that it might go all the way up to 3. Yeah, that possibility is still there, but the risk is still there, no? So you may want to watch that video also. Okay, so you may give your opinion, what you think. You can comment it out. I will read and I will also reply to you. And I may, if it's necessary, I'll make a video like this. This is actually this video I'm making upon a request from one of my commenter. So I hope somewhat you get some enlightenment. If you enjoy, do give your like, share, and subscribe to the channel. And we'll see you in the next video.